Hi there, good afternoon and welcome. You're watching Mutual Fund Corner. I'm Mangla Malu. With me is Sumaira Abdi. Like every Tuesday and Thursday, all your mutual fund queries will be answered on this show. Before we do that, a look at the markets. Well, from yesterday's close, the Nifty Bank, Sensex as well as the mid-caps are rather flat. The Nifty Bank is the underperformer with a cut of about 86 points. So we did see a sharp decline just about half an hour ago, and that seems to have found its feet and the market's attempting a bit of recovery. So what are the stocks which are leading the markets higher from the lows right now? We have ITC, a fair amount of a weight on the index, close to 5% weight on the index. ITC is leading the recovery charge out there. Along with that, we have Bajaj Auto also moving to the high point of the day, and Tata Motors, a stock which has done fairly well all of this month, one of the best performing stocks on the Nifty this month, is now attempting a move towards the high end of today's trading session too. Not just that, we have SBI as well as HUL moving higher as well. So let's see how this pans out. As of now, the mid-cap index absolutely flat. The premiums on all the indices, the Nifty as well as the Nifty Bank, all but eroded given the fact that the markets are absolutely flat on weekly options expiry day. We'll watch out for the last hour. That will be very crucial. First up, all the top stories, and then we hand it over to Sumaira. Market trades in a narrow range near the lower end of today's trading range on weak global cues and elevated crude oil prices. Private banks like ICICI and Axis as well as IT biggies drag. The HDFC Bank fights for the bulls. Mid-cap index trades in line. Jet Airways is a stock in focus. CNBC-TV18 learns that lenders have received 4 expressions of interest as of last night. The deadline has been extended to April 12th. SpiceJet, on the other hand, surges on reports that the airline is looking to lease at least 10 to 12 deregistered planes of Jet Airways. Bharti Airtel gains post a CNBC-TV18 report that the company, along with Warburg Pincus and Singtel, are looking to buy promoters' stake in Dish TV. The acquisition to help Bharti strengthen its home broadband play to fight Jio. TCS and Infosys trend lower ahead of their fourth quarter earnings tomorrow. The street expects a steady quarter. The margins, they could be under pressure due to rupee appreciation and supply side challenges. Big day for the world's biggest democracy as India gets set to elect its next government. Nearly 1.7 lakh polling booths, 20 states and union territories, 91 constituencies and 1279 candidates. India votes today in the first phase of the Lok Sabha 2019 elections. With that, we hand it over to Sumaira, who has with her Kaustubh Belapurkar of Morningstar.
Mangala, that's right. Thanks very much for that. Kaustubh is with us and he'll be answering all the queries that have been coming in. Hi, Kaustubh. Good afternoon. Hi. Good to see you in. And, our first query is already through to us. So we have Neeraj Nanga, who's on the line with us from New Delhi. Hi, Neeraj. Good afternoon. Tell us, what's your question?
Yeah, hello, ma'am. So I've kind of sent the entire portfolio for review with a list of queries also. So roughly at this point of time, I invest around 48,000 per month in the various funds. And I've written that I want to achieve certain goals, which is around 3 crores by 43 years of age and more. Yeah, so that is my question. How does my portfolio stand in view of that?
Okay, do you want to take us through the funds you're investing in?
Yeah, so I largely I invest in 6 to 7 funds. I don't know whether that's the right number of funds to invest in. But for example, 2,000 every month in HDFC hybrid fund, 3,000 in IDFC Premier Equity, then around 10,000 in Reliance Large Cap, around 12,000 in SBI Blue Chip. So there are 2-3 more in those. Yeah,
okay, so I think I have the rest of your portfolio. You have the Motilal Oswal Multicap 35, Aditya Birla Focused Equity, as well as the HDFC Balanced Mirai Asset India Equity Fund as well. Okay, so currently his total portfolio standing is at 16.5 lakhs. He's putting in close to about 50,000 rupees a month. Okay, so now 2 big questions. One is, of course, he wants to accumulate 2 crores in the next 7 years or roughly 7-8 years. From now, 3 crores in, say, 17 or 18 years from now. And he can sort of increase his monthly investment as well, which I think he would need to do. Other than that, is his portfolio on track?
Sure. So let me look at the overall sort of money, quantum that he's putting in, and then actually talk about the funds, right? So 48,000 right now. He's got about 16.5 lakhs of corpus, and he's got a goal of 2 crores, over the next 8 years. So clearly, one thing that I would urge Neeraj to do is increase that to 70,000 right away in this year, but also to meet that 2 crore target over the next 8 years, he will need to up his SIPs by about 15% every year, where then he can comfortably...
In addition to the 70,000.
In addition to the 70,000. So, you start at 70 this year, but then take it up another 15% every year, so that you can comfortably meet that goal at the end of 8 years. Because 8 years, I mean, is not too far away from now, and clearly, going through an equity market cycle, you need some buffer to be built in. And obviously, it's 3 crore over the next 13 years. That's, even at that 70,000, it is achievable. But obviously, we would recommend that, he's upping it up through that. So he should continue with that sort of glide path for the period of his entire investment horizon.
Okay, Neeraj, does that work for you?
Yeah, it works, ma'am. But my additional question is the list of funds okay, or do I need to make any changes to the portfolio?
Yeah. So, Neeraj, the funds that you invested in are largely good, so I don't have any complaints or any queries about the funds that you're invested into. The only point that I'll make is that since you do have, some part of the money that you're really going to be parking away for 13 years, I don't mind you adding, maybe one odd mid-cap fund to the portfolio, because I clearly see that you've got a fairly large cap bias portfolio. And since you have a 10+ year horizon, I don't mind adding one mid-cap fund to your portfolio. So, amongst, say, the Franklin Prima or it's the HDFC mid-cap or the DSP mid-cap, you can go ahead and add one of these as you're increasing your SIP amount that we discussed about. Okay,
so that will take his portfolio to 8 funds. Should he cut down one of the large caps then?
No, I think that's okay, because we always talk about that you don't want an over-diversified portfolio, but at the same time, you want some diversification across capitalization and manager styles. And I think he's kind of achieved that. So, adding one fund's not really going to dramatically swing too much.
Okay, fair enough. A query comes in to us from Twitter now.
One last question that I have.
Sorry, Neeraj. Yes, please.
Yeah, one last question, sir, that I have is I have a lump sum amount of around 20 odd lakhs because of my job nature. That's an incentive that I get. So is there a lump sum amount that you invest? Any strategy on that? How can I invest within this year?
Yeah. So, Neeraj, I would clearly see that, while you have that lump sum amount that's available, I would want you to stagger it out for the next 6 to 9 months. Clearly, we've entered into a zone, given that election results not too far away. The markets could trend either ways. There can be a fair bit of volatility. So I would say that stagger that at least over the next 6 months. You can just do kind of proactively put it on a certain date of the month rather than running an SIP, but definitely stagger it out. That's the advice I would give you. In terms of the allocation, I think you can stick to what you've done right now, but like I said, some mid-cap exposure would be good to add.
Okay, so perhaps the additional money could go into that. All right, Neeraj, thanks very much. All the very best to you. Up next, Rahul Verma has written to us on Twitter. So he has 2 queries. One is that his mother wants to invest 4 lakh rupees right away and wants to keep it invested for 6 to 9 months for his brother's marriage. Second is that he wants to put in 80,000 rupees right away as well, which he wants to be invested for 6 months, which he needs for his child's school admission, which will be due in August. So clearly, I mean, both of these queries perhaps need answers in the debt fund space. So what would you advise him?
So clearly, like Rahul has mentioned, his time horizon's anywhere between 5 to 9 months. And for this, we would recommend a category what we call the ultra-short duration funds, which tend to stay in that sort of a band and, will add some element of, alpha towards over and above a liquid fund. So would tend to net you higher, but over that time period, it's pretty good. So we've listed some names: the HDFC Ultra Short Duration Fund, the Kotak Savings Fund, the ICICI Prudential Short Duration Term Fund. These are some of the funds that we would recommend. Reasonably clean portfolios, and like I said, it's in line with the majority of what he intends to invest. So these would be the ones that I would recommend him to look at.
Okay, Rahul, I hope you were listening in to that. Another query comes in from Twitter, this time from Apratim Mukhopadhyay, who's written to us as well. He says he wants to put in between 1.5 to 2 lakh rupees right away for his daughter's educational requirement. He'll need the money in 5 years from now. So we don't know exactly what is the quantum he's looking to receive at the end of those 5 years. But he wants your advice on only a single fund where he can put this money. And, given the way he has addressed the query, I'm assuming that he wants it to be in one of the safer options.
Sure. So I would say that if he's looking at a pure safe option, then clearly a debt instrument would be it, and he said that he wants to stay away from some of the riskier names. Then something like a banking and a PSU fund, a fund that predominantly invests into bank CDs and PSU bonds, would probably be over a 5-year horizon be amongst the best options available if he wants a pure debt-focused option. The other idea that I'd probably just put out for him to think about is I don't know why he's so keen only on one fund, but if you can maybe pick a couple of funds, we can do some asset allocation within that portfolio itself. That you could take some exposure to a large cap fund, given that he's got a 5-year horizon, maybe to the extent of about 35–40%, and the rest goes into a banking and PSU fund, like I spoke about. And then he can get that additional kicker of equity returns, but he's not overexposed to equity, for this short time period.
Fair enough. Okay. Apratim, if you have a follow-up question, do write in to us. But our next query is from Ms. Shubhangi. She's written to us from Mumbai. So she's 37 years old and she wants to know how to measure the risk which is involved in fixed maturity plans. So, Kaustubh, are there any sort of guidelines that you can tell investors about?
Yeah, sure. So, just the construct of fixed maturity plans, right? So, they typically tend to buy bonds that would mature in line with
the maturity
of the fund. So, there's no interest risk per se, but what does potentially or technically exist is credit risk, right? So, you would, if you pick up the fund documents, there'll be a intended scheme sort of allocation across credit buckets, and that's what you should be paying focus to, that, is it going to be a AAA sort of rated, or is it going to delve into some of the sub-AAA bonds? So if you want a clean or a safer portfolio, AAA or pure AAA sort of FMP is what you should be considering. If you don't mind taking on some element of credit risk to enhance the yield that you earn, then you can potentially look at, some of the funds that would allocate to some portion to sub-AAA. I mean, that's really the metric that I would look at.
All right, Shubhangi, hope that works for you. Up next, Daryl has written to us from Bangalore. He wants to know which is the best way to actually get some US equity exposure into his portfolio. If he wants to choose, he wants to know which is the route that you would prefer. And if it is the mutual fund route, then I guess he needs help in how to do it.
Okay, sure. So I'm very glad that someone's talking about global funds, because
increasingly quite a few people have asked about it. Yeah.
And I think that's great, because we keep talking about that there's a huge home bias that Indian investors have, and clearly we need to look at allocating some portion of the portfolio to global equities. To the specific question that Daryl has, obviously there are two ways of doing it. One is that you through the LRS scheme, that you actually remit money abroad, open an account abroad and do it. But that's not really something a regular Joe on the street can do. I mean, it takes a lot of paperwork, a lot of wherewithal. You need to kind of find an advisor abroad. That's really tedious, right? Then there's that other route, which is a lot easier, which is through the domestic mutual fund route. So we have structures in India where you put money into a rupee-denominated strategy, and they would in turn invest into either stocks or feeder funds, domiciled abroad, which would invest into US equity. So I would say that is the preferred route to get into, and there are quite a few that exist from the Indian context, which he can look at, and we've listed down a list of US funds that he can potentially pick from. So I would say that's definitely the way to go, and I would definitely recommend Daryl to go ahead and do that.
Okay, Daryl. Up next, Darshan Prabhu is on the line with us from Mumbai. Hi, Darshan. Good afternoon. Tell us, what's your query?
I'm 27 years old. I have some SIPs done. I've sent you my portfolio already.
I know, but for the benefit of the viewers as well who are watching, who might identify with your portfolio, could you take us through what are your holdings, how much are you investing, what your goals are?
Okay, I have one SIP of 2,000 rupees of Axis Blue Chip. One Mira Asset Emerging of 2000, then L&T Mid Cap 2000, and some of Mira Asset India Equity and Parag Parikh of 2000.
Which is the Parag Parikh scheme that you have?
Long term.
Long-term equity. Okay. Now, you want to remain invested for 10+ years, right? What are you hoping to achieve at the end of it?
Nothing planned. It's like a long-time goal, like retirement.
No, how much money would you need?
It will be around 2 crores.
2 crores. Okay. Kaustubh, first question is on his retirement saving, right? So he's only 27. And you know, Darshan, if your goal is retirement and you're only 27, why are you looking to invest only for roughly 10 years? Why not the next 30 years?
I'll invest more. I just asked for 10 plus years.
Okay, so he is happy to increase the time horizon.
Right, sure. So, you know, if I look at the portfolio of funds that he's got, I think broadly the allocation is great. I mean, you know, he's got exposure to large, you know, sort of small and mid. And given his time horizon, I think that I'm pretty comfortable with that. You know, I'll have to do the math to see if he wants to achieve 2 crores, and I don't know what time frame, but clearly he'll need to up his SIP allocations. That's clear. So I would recommend that, you know, the funds that he's got, the allocations he's got are pretty good. He doesn't really need to change anything. But, you know, the overarching point that I'm making that he's only 27, and like you rightly said, that he needs to, you know, extend that period beyond 10 years. And every year he needs to step up as he continues to earn more, you know, not get stagnated at the same SIP amount, keep increasing that. And I would say 10-15% increase every year is not a very aggressive target, and you should definitely look to do that. And that's when he can very comfortably get his 2 crores at the end of 20-30 years, as he needs.
Okay, Darshan, so your portfolio is fine, and for now what you're investing is okay, but you need to keep scaling it up. But I believe you also have a question on a lump sum investment?
Yes, I want to do lump sum investment of 35,000 rupees.
And this is for how long? Also for...
more than 10 years, more than 10 years.
Okay. So he just have extra money at the moment which he wants to deploy. Okay.
So I would say, you know, given where we are at the markets right now, probably just, you know, just pick 2 funds, one large cap, one sort of mid cap. You know, and an equity.
Or one of the existing funds?
Yeah, absolutely. So, you know, he's already got, for instance, a Mira asset in equity. He can allocate some to that. You know, he's got the L&T mid cap. I'm just reading names that are coming to the top of my mind here, and you know, he can just add the lump sum investment between these two. So he's not really moving out beyond the funds that he's already invested in.
Okay, Darshan, does that work for you? Just use one of your funds and deploy your money in that.
One more doubt I had, last doubt. It's like I am an NRI, so do I have to invest in any ELSS fund? Is it requirement?
Okay, NRI looking to do tax saving.
I'm not sure, and that's more from a domestic perspective. I'm not the tax expert here, but I think it won't really, you know.
Yeah, maybe we'll connect you with a tax expert on one of our other personal finance shows, Darshan. But for now, I hope at least your mutual fund and investment queries have been answered. Thanks very much for joining in.
Thank you so much.
Kaustubh, thanks very much for answering all our queries this afternoon. With that, we'll wrap up for now on MF Corner.